Welcome back to another episode of the XRP podcast. These are very special, and today it's going to be a fun one because we've got Jake Claver sitting right beside me almost. It's going to be we're going to have a great conversation, I think, today. But if you guys don't know Jake Claver, he is, of course, an entrepreneur and investor. He serves as the managing director of Digital Ascension Group, which is a multifamily office that specializes in bridging traditional wealth management and digital assets. So he also serves as CEO of Syndicat, which is a special purpose vehicle, SPV, investing in investment management platform that tokenizes assets and provides enhanced liquidity out there to you guys. So a guy who has been in the space for quite some time, and you guys will, of course, recognize him from many of the Ripple and XRP events. So Jake Claver, welcome to the show.
Absolutely, brother. Thank you so much for having me.
Yeah. So so the background, I think that a lot of people are trying to put their heads around, especially in the XRP ecosystem, what you guys are doing with your own organization at the same time in which we're seeing this absolute bull rush seeming to happen in Wall Street. And we'll get into all of that. We're going to talk about BlackRock's involvement. We're going to talk about the reverse carry trade today, what XRP could look like in the future. But I want to go right into how you guys are doing business today. What an XRP investor comes in, I know there's a limit to kind of be involved with you guys, but what do they get when they drop their XRP or other digital assets into your organization?
We actually don't take we take possession of the assets. They move them into custody, but they are still their assets. So that's been a pretty big piece for me. So maybe a little context and background about my journey would be helpful. So I made a bunch of money in digital assets in 20 and 21, and then started consulting with some family offices, working with them to provide private client services. So things that you would think of for a normal multifamily office, estate planning, tax strategies, wealth management, wealth advisory, all of those things kind of culminating in a one-stop shop for somebody that makes a substantial amount of wealth in digital assets.
Yeah.
And I have a very high conviction on XRP, which I think many people do, you as well. And so I consolidated my position in early 21, well, actually 22, and about the time I started getting on X and talking about a lot of the stuff that I was doing. So over the last 2 years, we've worked to provide institutional custody for our clients, which you mentioned. And you get, a lot of people are scared of a repeat of FTX or Celsius or Voyager and Insured. And so that's what we provide for people alongside the advisory. And then we have some really unique strategies to be able to actually generate returns on assets that don't have a native yield. Like, Ethereum or Solana, you have ways that you can stake that and generate some returns. Whereas XRP, a lot of people have been waiting for Flare and some of these other opportunities to generate returns. And we've already done that. So we paid our first check to people last month out of our hedge fund. Nothing crazy, a little less than 1% was paid out to people over the quarter. But it's returns, free cash on your XRP, sat in institutional custody with all the assurances that you'd get from like a Schwab or Fidelity account.
Okay, so there's a few things I wanted to drill into that. Because you're not a financial advisor, but you have teams that work with you. So when you guys set up the group, Digital Ascension, what did you do? Did you go out and say, hey, okay, here are all these, maybe a handful of financial advisors. Did you train them on digital assets? Because not many financial advisors I know, and I know a lot of them, know anything about blockchain or digital assets. I mean, they are completely lost.
They won't touch it.
Yeah. So what's the process? How'd you convince guys to put their name on the line?
We, a lot of the people that we originally brought in were people that were Web3 native that went out and took the test and passed their Series 65.
Okay. So they went out and took the test.
All right. May be familiar with Mikkel or Connor.
Yeah.
Yeah. So he's one of our advisors, works with the firm. He was actually the first one that came over and brought his 65 to work with us. And then we've got a few other people that have, consulting agencies and have gone and got their test, because there's really no outline. And we actually sit on the committee for the Digital Chamber proposing regulation for the SEC on how they're going to regulate RIAs in the space, because to your point, nobody's doing it. So we looked at the traditional world, and I said, hey, if I want to do this in a really high level way and set the standard for the industry, what does that look like? And so we do have some people that have dabbled in digital assets that are financial advisors, but it takes a lot of understanding. To your point, this isn't just some fly by night easy thing to grasp, especially orchestrating all the same things you would have in TradFi. So billing, reporting, SMA strategies, the ability to go ahead.
So, well, okay, so I see the point of bringing in the Series 65, side of things when you look at just the credibility of what a financial advisor brings to the table. Obviously, digital assets, a completely different animal. We hold a seminar every 2 weeks here in South Florida, and it's mostly for high net worth individuals and business owners, and they're all wanting to just learn about crypto. Most of it is all about Bitcoin and just learning in general how to just go purchase a Bitcoin today. But over the past year or so, we've been doing this for a while. One thing that I'm starting to see more and more, and these are millionaires, basically. We have 125 millionaires in a room every 2 weeks, and they're asking about digital assets, and they're asking questions that should be, I believe, targeted at their financial advisors.
For sure.
Okay. And they're telling me right now, we have a whole team there, and they're telling me that the financial advisors have pretty much sworn it off.
Yep.
Just saying,
won't touch it.
we're not interested, the whole thing. I've got 2 guys here in South Florida that have started to move into at least investing in Ethereum. And one of them is now starting to take a look at XRP and Solana. And the point that we're getting into is that they themselves are in an education process. So here's my question to you. With all that being said, how fast do you think we're going to have digital asset advisors really in the market? Because there is so much money on the sidelines around liquidity-wise that could easily deploy so fast if just the investment advisors would get into it.
We're it. We're the only SEC registered RIA that advises strictly on digital assets.
Well, you're one house, man. We're talking about millions and millions of investors.
Yeah, and we've
what do you think it's going to take?
So you need education in the space. There's been a few people that have put out programs and continuing education for advisors.
Yeah.
And there's a few certifications that you can go through for your CE and go through the hours. But really, it's basic stuff. They talk about Bitcoin, Ethereum, and some DeFi, how to hold it on a cold wallet, what to do on an exchange. You have some people in the market that have created intermediary services like L1 advisors. They allow you to connect your wallet to their infrastructure, and they'll push you a trade in DeFi, and then you still have to execute it.
Right.
We provide the institutional custody. So we actually, you get to add beneficiaries, your spouse, lines of credit. You can use it as a bank statement to share with your bank to be able to purchase a home, which, the Housing Committee just passed recently that they would allow digital assets for that capacity. So, probably when we talk to the large banks, we've talked to Fidelity, Citi, Goldman, BNY, all of them. They're still 12 or 18 months away from really rolling this out in a retail-facing manner. Fidelity will hold your Bitcoin and ETH, but that's really kind of the limit of what they do.
Well, and there, the Fidelity team, the digital assets side over there, the problem that has resolved mostly is that it's difficult to move in and out. Well, it's impossible to move in and out. You can only go in with cash, purchase inside the ecosystem, and then go out with cash. So it kind of limits you, and it also pushes you into a decision, because there's no lending over there or borrowing. None of that's taking place yet. But here, if you think about that, at some point they're going to do this. You've got Coinbase and Morpho now doing Bitcoin lending, integrating into a centralized exchange. What about projects like what you guys are doing? Can I go out and lend against my XRP today?
Yeah, we've got.
What's the LTV? What's the LTV?
So, soon it'll be much higher, but currently it's about 45 to 50% LTV. Interest rates aren't great, somewhere between 13 and 16%.
Flexible?
Flexible.
Okay.
Yeah.
So
interest only with balloon at the end, and you can refinance.
Okay. Well, that is my question, because that is a concern I have right now with lending, is that in some cases, lending rates aren't that great. LTVs are kind of meh.
Hmm.
I mean, Morpho has been somewhat consistent. We work with them. They're around 5 to 6% on Bitcoin, holding up, I think, a 70% LTV right now,
That's great.
which is pretty good. But we need that for XRP. We need that
Well,
for
I,
XRP.
I think you might get it in the near future if we
Okay, all right, here we go. You're
if we
gonna
get
drop
some
some
things across
bombs.
the line.
You're gonna drop some XRP podcast bombs here. I
Yeah,
like. Okay,
yeah.
what are they?
I have NDAs, so I can't like get it.
Come on, Jake, you can
I
do it now.
know. I would
Do
love
it
to,
now.
Paul. I would love to. We got to finalize some stuff, but in the near future, I'm hopeful that we will have somewhere around 6 to 8%
Okay.
interest on longer term notes that are you can pay off at any time with interest
Higher
only.
LTVs.
Yeah, 70 to 90%.
Okay. Ooh. Okay. Well, I don't know if I would go at 70 or 90, but
Yeah, I mean volatility, right? We
yeah.
want to make sure that people are making good decisions. We advise most of the time somewhere between 20 and 40,
Mhm.
just because of the volatility in the market. I mean, we had a big move down this morning. So yeah,
Yeah. Well, Coinbase dropped some terrible numbers, this morning. It was kind of bad. But then you have the jobs numbers that came out. I won't even talk about that.
yeah.
That's a whole nother, macroeconomic BS that's about to blow up with the Fed. But who knows? We could be facing stagflation right now as we're talking, especially with those jobs numbers and the FOMC meeting this week of them holding.
Holding.
With
Didn't
all of
move.
that, though, I think, though, we're in, and this is something I've talked about for a while, is that we are in an era. I grew up in Silicon Valley, worked with Microsoft, spent my time in seeing the birth of the internet. Then I saw the birth of mobile. Then I saw the birth of social. And this era is so much bigger. It's like there's another internet being built right now.
Yes. Yeah. The amount of liquidity and opportunity that exists right now for those that are watching this is beyond anything that we've seen in the last 30 years,
Yeah.
for sure.
And it's still so early, because even though Wall Street and CNBC and Squawk Box and everybody's talking about it, your average Joe on the street who's been investing in pension funds, ETFs, traditional stock and securities, they don't even have a clue yet of what to do. And I think that's the big era between now and the next 18 to 24 months, where we'll start to see that early adopter that has been the TradFi leader start to come in the space. And then we'll see, kind of that bell curve up over the next 5 years. What is the timeline right now? Do you think that we're going to truly see a transitional change in digital assets?
Well, yeah, I mean, you mentioned the reverse carry trade when we first started the conversation. I think that
Yep.
there's going to be some catalysts that push that along a little faster than what it would be otherwise. Most
Okay.
people are looking at a 4 to 5 year time horizon for the adoption of this stuff, and
Yep.
um, you know, all of these professional services to kind of be rolled out and the education to happen. I feel like we're obviously ahead of the curve, and I do think that the curve could be protracted if we see some of these macroeconomic events
Right.
push it along.
All right. So you're teasing something there. For some of our viewers, and I think most of our audience is probably XRP savvy to the most part, but we do get a large audience that's just now exploring it for the first time. Okay. And the reverse carry trade theory that is out there is a very interesting one, because obviously the Bank of Japan, giving away free money for a long period of time, eventually you got to pay the piper.
For sure.
So explain to our audience what you think the reverse carry trade does in terms of its impact on XRP and what we'll see coming out of this in the future.
So there's what I call the domino theory. I put it out a little more than a year ago, and it involves a reverse carry trade. So there's some catalyst that causes the Bank of Japan to raise interest rates pretty aggressively in a
What
short
would be the
period of time.
catalyst?
Oil. I think there's going to be some type of spike in oil, which would drive energy costs in Japan, and would require them to
Right.
push interest rates up to mitigate the inflation
Okay.
that they would see in their economy.
Okay, so if you had that occur, because you think about it, the U.S. has bailed the Bank of Japan out multiple times, mainly to help essentially. Well, this is an interesting scenario because if you think about it, because they're trying to keep that interest rate low, because if you look at the reverse carry trade, and if those notes started coming due, most of that is security held,
Right.
so you're talking about bonds and treasuries that would immediately start to liquidate out of the U.S. economy. That would be catastrophic,
Yes.
So
It-
what replaces that? Explain to me what could replace that kind of, where if a reverse carry trade and an interest rate rise in Japan were to occur, how could we avoid a cataclysmic effect on our bonds and treasury bills?
so they've already backstopped it with the Genius Act. So the estimated volume of stablecoins that'll be issued is around $2.3 trillion, which
Right.
just happens to be the foreign debt, about the foreign debt that's outstanding that would flow onto the market.
Mm-hmm.
So if you put that in place and you know that these banks are ready to go, they're ready to issue their stablecoins, you would drive demand here domestically in the U.S. for them to issue the stablecoins, and they would buy up the treasuries that float onto the market, and that would stabilize the bond market.
All right, so stable coins, RLUSD, USDC, et cetera, all out there being backed 1-to-1 with U.S. Treasuries. That's kind of the supporting backstop that you're claiming. And really, when you think about it, 2.3 trillion. I know it's a lot of money, guys, but let's go back into the dot bomb. 7 trillion came off of the Wall Street scenario in a period of about 8 months. That was a true huge event that occurred. You don't think that could possibly occur now with what's happening in the stablecoin?
Oh, I think traditional equities would be impacted significantly. I
Yeah.
think broader markets would absolutely sell off. I mean, I think close to $10 trillion has been borrowed from the Bank of Japan and put to work across multiple markets, a large majority of that in U.S. debt.
Yeah.
But, maybe a third or a fifth of that is in U.S. debt, and the rest would be in equities, gold, commodities. I think you could see, and people are not going to like this, but like a $2,000 or $2,100 gold with reverse carry trade on one.
Yeah. So obviously people would sell these to try to get out of their loans, start selling assets of all types, be able to get those margin calls done.
And you would have, the yen aggressively appreciating against the dollar, so and other currencies. So people liquidating positions into other currencies would have to swap through FX back to the yen to be able to repay those loans.
Yeah, and the amount
That's
of
where
FX.
I think XRP could play a role.
Yeah, FX is huge too in terms of the overall market. Just small fraction moves in that makes ripple effects in all economies across the globe. So now you're talking about, no pun intended, ripple effect. But let's talk about that, because if you have that occur, the cataclysmic event that everybody's been talking about, which is the Great Reset, okay, how the financial industry and maybe the infrastructure of finance in general completely goes to a digital format. This may be a whole lot of stable coins. This may be what the ECB is trying to do, what we're probably going to see in Asia in terms of stable coins and even CBDCs. Where does Ripple play into this?
So Ripple has its place, but I think that they have a competitor, R3, which nobody really talks about, that does private permissioned ecosystems, that's integrated with a lot of large banks and institutions globally, and is also working on stable coins and CBDCs as well.
Oh, yeah.
And their internal settlement mechanism between those siloed ecosystems, preferred is XRP as well. So irrespective of which one of those parties ends up winning out, I think XRP would benefit in that circumstance. But Ripple, with the acquisitions that they've made with Medico for custody, standard custody, the trust bank here, the prime broker that they just purchased, that gives them a lot of leverage for the bank charter that they just applied for. There's never been a non-bank that has owned a prime broker.
What do you think of the little pushback we saw? What was the BIA? I think it was, saying, "Hey, wait a minute, we think there's some risk here." And of course, everybody on that board is all Jamie Dimon and down. So it's the existing banking infrastructure saying, "Wait a minute, we don't need Ripple in here pissing in our pond." So eventually this is just going to, because that's just a lobbying,
Yeah.
group.
They're scared. I mean,
Yeah.
it cuts into their margins and their monopoly that they have. And if you have somebody come in and offer things faster, cheaper, and more
Yep.
scalable, it
Yep.
threatens their supremacy in the market.
No doubt. You think this is going to slow it down? Because my theory is that we'll probably see a little bit of a delay on their banking charter, meaning Ripple's
It's like
banking charter.
November is kind of my expectation on that.
Okay, you and I are in about the same time. I'm thinking November, December. So yeah, okay. All right, so that would really accelerate things, because this is another thing that I think a lot of people, if you've been watching our show over on the main network, is we covered this whole issue where J.P. Morgan is going about the process of now charging for direct access to these external accounts. So they're going to get their pound of flesh now. It's no longer free for you to just transfer your money via Plaid connection, from your bank account over to your centralized exchange. Now you're going to have to pay up. The toll is in. And everybody's announcing this. And then Coinbase comes out and says, wait a minute, we have a partnership with Chase. Oh, how convenient. This is not looking good.
Well, the incumbents aren't going to lose position here, right? That they'll leverage the technology and it'll help, right? It's going to reduce costs for the consumer across the board, but it actually ends up allowing them to make more money if they adopt this, because the volume of transactions will be significantly higher. They can charge less, so they're passing savings on to the consumer, but their margins would actually increase.
Yep, exactly.
And so between that and the volume that they would then be doing, they would actually make more money. And I think they're starting to realize that.
Yeah, yeah. Well, and I think you look at, do you not think though that this is going to create the rise of companies like you, which are more boutique oriented, smart, savvy investors, understanding they're getting killed over here on fees, and can start to move into more, I won't call them private family offices, but it's kind of like private digital wealth management companies like what you guys are building. Don't you think that's going to happen?
I mean, we wouldn't be positioned here otherwise,
Yeah.
But yeah, I mean, you've already seen that transition start. There's been a lot of families over the last 20 years. There's been a huge growth in family offices globally. That moved away from private banks or other parties that were, not providing the level of service that they were looking for, and charging fees larger than they would have to pay if they did it on their own. And so what we do is we try to streamline systems and reduce costs as much as we can while still providing a white glove service for our clients. And I do think, to your point, that it will be much more prevalent in the future.
Let's step down the apex investor trail. Off the apex investor, and what I call the apex investor, someone who's getting their money managed for them. They're going into companies like yourself, or custody of some sort, maybe with some of the centralized exchanges, et cetera. Then you move into high net worth individuals, anywhere between $500,000 and $10 million in digital assets. In many of those cases, of the people that we talk to, they're not going in yet on wealth management companies. They're trying to do it themselves through multiple cold wallets, a handful of exchanges. It's a spider web of stuff that's happening. And you look at what Robinhood is trying to do, even though Robinhood's investors are mostly people under $5,000, so it's not a lot of people that have wealth over there. Coinbase, a little bit different, and then a handful of others. But outside of that, you don't really have many companies really focusing on digital assets. Even if you look at Fidelity, not really moving. I know Schwab said they're going to do it, but probably it's another year away. JP Morgan and Chase most likely going to roll something out soon. What's going to, because we could be in a potential fall in the market, but also a continued bull run if you look at the angles here. So there's going to be some wealth build.
I think people are going to come into a lot of wealth through the end of this year. And if we, and I say we because I feel like I'm part of the XRP family, I've been here a long time, had just left it up to the banks to come up with this, most people would be saddled with tax implications, not have the education to make sure that they're protecting their assets and their wealth over the long term. And so that's kind of been my mission, or my value that I think I bring to the community, is, aside from the services, just helping people start to understand these concepts for this asset class and
Yeah.
start to surround themselves with the right professionals to take advantage of it. And so, to your point, a lot of people do have a spider web of stuff, and that's not wrong, right? You're mitigating
Yeah.
risk of loss.
Yeah.
You're holding some assets here and there. If you have one situation versus another that you lose a portion of your assets through some unfortunate circumstance, it's not the
Yeah.
whole thing. We have clients that hold some assets away from our institutional custody.
Hmm.
I understand that, right? But we do provide the most robust security that exists out there, and it's insured. But the analogy that I could give people would be: imagine holding analog or paper stock certificates in your
Exactly.
safe.
Yep.
That's great.
In the old days, you used to do that, but
Exactly.
not
And
anymore.
and that's how I view digital assets today, right? You
Yeah.
are holding these physical items. There's no recourse. There's no insurance if they catch on fire or get lost.
That's happening with the gold bugs right now. They're
Yeah.
stacking gold in their safes.
And we have partners to facilitate that too. And you want liquidity. It's a give and take, right?
Yeah.
Like, if you want extreme ownership and responsibility, you're probably going to have to give up some of the benefits that you would
Mhm.
get, and make sure that you have the certain things in place to protect stuff. But you're also not going to get liquidity. You're not going to earn interest on any of those things.
Yeah.
Whereas if you're partnered with an institution that you trust and has a track record and has the credibility, then you can kind of have the best of both worlds. A lot of the
Yeah.
strategies we put out there, I call them like have your cake and eat it too type stuff.
Okay. Well, and I think this is, I have so many questions here because when one thing that I'm looking at is this stack of investors that are out there in the space right now, and they're going to have the new guys that are coming in, and they're going to make their way in there eventually, and then guys that are currently using traditional asset and money managers. Okay, and they're going to all of a sudden wake up and say, "I need to deploy 5% into digital assets." Well, that could be $5 million in some cases, like
Sure.
right there, from an individual investor that's sitting on 100 million out there right now
We
in,
work with them.
yeah. So they deploy 5%, they're moving into the market. Then you get this next layer of DeFi strategies that are being deployed. I just had the guy from Elliott Trades on our show the other day, which runs Black Hole, which is a huge new DEX, massive. It's on the AVAX ecosystem.
Oh, wow.
Looking at the amount of, and it's super risky. So you guys, if you go out and look at that, just understand it's
Not financial advice.
yeah, not financial advice. That's extremely risky. Yes, 400% on something is probably too good to be true.
Yeah.
But my point is that it's bringing a lot of awareness to this whole DeFi ecosystem. You look at Aave, what they've been able to do in a very short period of time, which, by the way, when I talked to Stani 2 weeks ago, he said XRP is coming to Aave.
Oh, I believe it. They have
If
the
that
EVM live chain.
happens,
They'd be able to facilitate that for sure.
that would be huge because you'd be able to go directly in on lending on XRP immediately with them. And I think that's the point I'm getting at is there's a lot of people that are below that $1 million right now. I mean, it's the bulk of the market for the most part in digital assets that are looking for the best, return on assets, return on investment, and they're trying to sprinkle this out through altcoin buying, meme coin buying, a little bit of DeFi, holding XRP. I know who you guys are. I know you. I'm pointing right at you right now. How can they level up? What are some basic strategies that you would say, guys, you need to really zero in on something a little different?
It's hard because there's not a whole lot of financial advice for that group of individuals. And we want to disseminate down to those people, but unfortunately, a lot of what we do has a lot of red tape for compliance and costs associated with it. So it starts to make sense, to that second demographic you spoke about, somewhere between 500,000 and 10 million
Yeah.
in current portfolio value is where we partner with people and then work with them.
Yeah.
I would say, watch shows like this. I mean, you're educating people, helping people out, making sure that they understand risks associated with these things. I'm waiting, and I think this will happen, for DeFi to be paired with institutional custody. And you'll have insurance on the smart contracts. Like
Hmm.
Nexus and a few others are doing this as well.
Yeah.
So there's just been so many exploitations of smart contracts and rug pulls. You had Munacy not too long ago for the XRP community.
Yeah.
Many things where, to your point, if it sounds too good to be true, it
Probably
probably
is.
is.
Yeah.
We talked to the guys at Doppler. I like what they're doing. Very similar to us. They use copper as their infrastructure for holding the asset, and they use a copper pledge or copper clear loop, so the
Hmm.
asset stays in your account, it's reflected, and then they're able to draw margin against that, and they're able to pay a reasonable yield of 2.5 to 4.5% on your XRP. Like
Okay. That's
that's
not bad.
sustainable in my mind,
Yeah.
right? But if you're looking at something and they're paying you 4% a month or 10% a month or 20% a year, you start to like just check on things, right?
Yeah.
And maybe you
Well,
know
the
dip
risk
your
level
toe.
is high. Yeah, the risk level is high. And it's something that you have to consider, especially if you're getting in the DeFi market. The way that we've talked about it before is, if you look at, listen, maybe digital assets is 10% of your strategy, 20% of your strategy. Let's say it's even as high as 50% of your strategy. If you just came in and said, okay, I'm going to lock in 5% to play in the DeFi area, that's still a subset
Yeah,
of your overall strategy, and it's good diversification in general, if you think
dip your
about it.
toe.
Yeah.
Yeah, I wouldn't risk the farm on it, but if you want to dip a toe and see how things work, get comfortable with things. But again, once you see institutional DeFi, and we talked to Flair at Hugo at
Yeah.
Flair, he's looking at some of that. Um, but I still think it's probably, again, working with Anchorage and these banks.
Right.
Anchorage is our custodian, and I've talked to, we used to hold at Standard Custody before Ripple made that acquisition.
Hmm.
It's going to be a little bit before they roll out smart contracts inside their infrastructure and start leveraging DeFi to play in liquidity pools and AMMs. And you said this earlier, we're super early.
Yeah. Well, because you think about this, man, everybody is rushing to the gates right now. I don't know if you saw the SEC chair come on with Paul Atkins this yesterday, and I mean it was a big deal. He basically opened the gates and he says every major tech company in general, finance outlet is lining up to tokenize. Okay, so if they're all lining up to tokenize, and then you think about Project Ion, connect the dots for me there.
So Project Ion was finalized in August of 22, which was a partnership between R3 and the DTCC.
Yep.
And it's running in parallel with the back end of the stock market that would provide instant settlement between the clearinghouses and the brokers. So many
Right.
people might be familiar with GameStop or AMC
Exactly. Yeah.
when that happened.
Yeah.
They actually oversold the stock by like 39% and had to lock trading and pull stock back from people. People were very upset about
I
that
think
whole
I
deal.
think Vlad about had a heart attack over that weekend trying to fund it.
I believe it. Well, and that's the deal. There's T+2, I think, at the time between the clearinghouses and the brokers. They've
Yeah.
since moved to T+1, May 28th last year and 24, and they had the option to settle real time via digital asset when they pushed that update. So it's there, it's ready, but we need something with enough liquidity to be able to provide the settlement for that. And again, depending on if there's a supply shock for XRP, I think it could end up being the go-to in that position.
Well, and that will be the key if we do see that start to materialize and XRP becomes the underlying asset. I mean, now you're talking about now how fast do you think that could occur? Because tokenization is starting to happen now. We're seeing tokenized stocks starting to take
Well,
off on Solana. Explain how quickly that could go into
you
effect.
don't even need tokenized stocks for the implementation of settlement between the clearinghouses and the brokers.
Yeah.
You could actually tokenize the stocks on a completely separate network. The value between the settlement and clearing between those two counterparties would just be facilitated on the XRPL.
So that
So
would be, so would that be more of like a bridge of some sort or no?
mhm, yeah,
Okay.
I mean, I actually just interviewed the gentleman from Wormhole yesterday. Had him on my show, and we
Interesting.
talked about Ondo and
Yeah.
Ripple and BlackRock and a lot of things. Um, but yeah, I think that Texas Stock Exchange is supposed to go live in 2026. I think
Which
that
is
you can
BlackRock.
see, yeah, BlackRock and Citadel.
Yeah.
Here in Dallas. And so I think you could see them launch that as a tokenized stock market.
Yeah. I think they will. I think there's no way that Larry doesn't pull that
For
card
sure.
and get rolling, because you have to one up Wall Street. You've got to make something differentiated. That's going to make, 365, trading happen immediately.
Well,
So, which
they're
is a big
supposed to
deal.
go 24, 5 days a week. So 24
Yeah.
hours, 5 days a week, and they'll still
Yeah.
leave the weekends off.
Yeah. I don't know. This is, it's getting interesting. It starts to put in the theory that how is Ripple and BlackRock seeming to almost pace each other
Mhm.
left and right here? And there's a lot of, I'm not, there's some conspiracy theories. We won't go down that rabbit hole, but explain to me why you think these two companies are in so unique lockstep.
Well, after 2008, BlackRock's whole premise, and I've said this before, and I think it's possible, it's plausible that they could be a proxy for the government to be able to make sure that the stock market and everything's maintained. Other countries, just buy stocks directly. We can't do that here in the U.S. So you need something to be able to add stability to markets. But their whole objective has been to repackage the debt and kind of float that out over time so that it wouldn't be one big impact on the economy. And so that's, kind of the same thesis here. I think if you saw a large impact to the economy coming and you needed a liquidity buffer, I think XRP could provide a really good solution for that, to be able to route through the DEX and mitigate the breaking of systems, to be able to settle stuff on the back end. And then also, we have 1933 when they revalued gold and offset our debt.
Yes.
Right. To revalue gold to the level it would need to be to offset the debt at this point would be astronomical. And a lot of people are betting on that. Right?
There's a few of them out there. Andy Schechtman, who's been on my show before,
Brilliant
he
people.
believes that's going to be the model to reset the system, is a gold back debt reduction of just revaluing gold to what they think it would be, is around $30,000 an ounce.
Yeah, it would have to be. It currently sits at like $42 and change on the Fed's balance sheet, right? So it's not even up to what it is today. But if you had another mechanism by which you just start leveraging or utilizing an asset that was also sitting on balance sheets, you have assets and liabilities, right? And so if your liabilities are way up here and your assets are down, but you could just start using that asset and it would drive the value up, you don't have to reprice it.
Yeah.
That would be a really interesting way for them to be able to offset a large majority of the debt. And I think a lot of people have already put that thought forth with the Bitcoin Strategic Reserve.
Yeah.
They're like, hey, let's buy a bunch of Bitcoin in the US, and as it appreciates, the balance sheet looks a lot better.
Yeah. Yeah. Well, and I think the point being behind this is we are in such a unique time. It's like I say a lot of times, is that it's very similar to the birth of the internet, but this is the birth of the new finance infrastructure. We haven't seen this in our lifetime. This is all the way back to Bretton Woods, essentially, which is essentially, if you look at when Bretton Woods happened, all the way through when the Fed was introduced, World War I was the next year. I mean, just almost looked architected to me. A little similarity to right now, don't you think?
I think for sure. Well, you got to bring back trust to the system. At this point, it's lost. There's a lot of people that know there's a problem. When you go to the store and eggs are 4 times what they were 5 years ago, the cost of living is up substantially. And if you have that gap that gets too big, you have problems. We've seen that in other countries like Zimbabwe and Argentina as their currencies collapsed.
Right.
So we've got to shore that up, and we need to bring back trust and make America great again. Right?
Yeah, for sure.
So
do you know Nathan Allman?
I'm not familiar. No, sir.
He's the Ondo guy.
Oh,
so,
okay.
Yeah, he was former Goldman Sachs.
Okay.
Okay. And you look at treasuries on XRPL right now. This is all under the OUSG thing. You put that together with what they're talking about as these wrappers for kind of the money market fund, which is really kind of what that really boils down to.
Yep.
which is including, guess who? BlackRock's treasury fund.
Yep.
So again, you're making these connections of Wall Street likes who it's almost as they're embedded in this ecosystem a few years. It's like they're moles. They're embedded in the ecosystem, and then they build these tools. And the more we research and get a chance to interview and talk to these people, you start trying to find out who these guys are, where'd they come from, you know, and so many of them are Wall Street legends that are now into this space.
They see where the puck is moving, right? And if you can be part of what architects that and put your stamp on it, your flag in the ground. We had Ray Dalio finally just stepped down yesterday, which was an interesting transition.
That was a big move.
But and
how do you think he did?
How do I think he did?
No, why do you think he did?
I'm not sure, to be honest with you. You know, Bridgewater's done exceptionally well, and I like the corporate culture there, the meritocracy that he's put together. I've read all of his books. But I mean, he sees the impending crisis that's coming, and maybe he's trying to move out of the way for that train.
Well, yeah, before the train gets here. What you think is going to happen, timeline? I know it's not even about, we can't put a crystal ball out there, but do you feel that the market we're in right now is going to yield some major gains because of this, this turmoil that seems to be very positive for the market in general? We're at all-time high on the S&P, et cetera. You think that's going to be a short time window, which could be between now and the next 18 months, while Trump still has somewhat control before the midterms? Or do you think we are in for a potential reversal on the S&P?
I think that we're going to have a move similar to what we had in 2020, where the reverse carry trade unwinds and there's chaos.
Yeah.
Straight down.
And then just
and then it's up and to the right for the next 10 years. I think with the advent of all of these technologies and the culmination of AI and blockchain and so many other things that are going to provide real GDP and growth to the economy and remove frictions and costs, I think we're poised to have a really good decade. But I think you need to remove the leverage that's in the system before that can happen.
Right,
and I think in doing that, you'll also get the adoption of a lot of this stuff as well. But yeah, I do think that there's going to be a significant move to the downside, which people don't enjoy bear markets, and sometimes they last too long. I would rather have it happen really quick and get over that and then move on to the better part.
Well, it's like 2020. I mean, that was a wealth transfer, orchestrated wealth transfer.
I mean, Buffett doesn't sit almost $400 billion on the sideline.
Yeah.
There's
a reason for that. Yeah, for sure. What do you make of these rumors around BlackRock's Aladdin system that they're testing on XRPL?
Probably valid in my mind. I think, and I've stated this publicly a couple times too. Ripple and BlackRock, I think, are much more aligned than people really comprehend, and there may have even been seeds planted very early on to have Ripple go out and create these relationships abroad. It's a startup out of Silicon Valley. It's not affiliated with it's kind of against the establishment, but working within it. And you drive all of these people to adopt this technology when in reality it was orchestrated so that we could maintain global superpower as a financial leader.
Well, and I think, you also look at just ISO, 20022 all starts to play into this. Of course, XRPL right there in the middle of it. I think this is it's just a convenience that's starting to play out because we're seeing so much of this, because eventually they have to show their cards because the market requires the next move. And then, the reveal occurs. It's what I call the season of reveal, which is happening right now in front of us going forward. Okay, so we got to give not price predictions, but everybody's wondering what's XRP going to be worth, in the next few years. Obviously, if all this plays out, and the XRP ledger becomes an underlying framework for everything you're talking about. I've seen your numbers, which I can't get my head there because I can't think in that quadrillion numbers and hundreds of trillions. But what do you think as far as the near term? If you were a brand new XRP buying at $3 today, just think about that, guys. You're buying XRP for $3 right now.
Like buying Bitcoin for $3.
Exactly. To me, it's crazy. I still think it's a 10x minimum. My target is still around $50 to $60. What about if this changes? If we truly see an underlying framework come out?
I think your target's absolutely reasonable for ETF launch. If we saw a supply shock and we get some corporate treasury movement, you get some FOMO. We have the Ripple case, finally end here in the U.S. and maybe there's some systemic partnerships that are announced, between some of the people you mentioned here and others. You can absolutely see a $50 or $60 XRP.
Well, that would only put it at about $4 trillion. In terms of market cap. And you think about it, we just had another company go $4 trillion this week with Microsoft. So, I mean, they're printing over there and they're not part of the next generation is my point. It's like where NVIDIA will be in 10 years. Think about that, guys.
Well, and so this is the other piece that I would challenge people to think and maybe change their paradigm around valuing these protocols in the same framework that they do corporations.
Right, yeah.
Right, so people look at market cap of a corporation. All of that stock is liquid and being traded. Okay. These tokens, it's not that way. So even though there are 100 billion or were 100 billion XRP when it was at its inception, not all of that's on the market. It's not actively being traded. So what is the actual available supply that's being traded?
Yeah.
Right. So supply and demand dynamics are going to be very different on these types of assets versus stocks that all of them are liquid to be traded on the market. And so you get, I don't know if you've talked to Zach Rector or not, but he talks about a market cap multiplier, which is basically, you put in $1 and you get 50 on market cap.
Right.
So if you had 2 billion XRP trading and available, but
what
there's
would that
100
market
billion.
cap look like? Yeah.
Right. So that's why, I think people have a challenge with that. They think that much liquidity actually needs to flow into the asset for the market cap to raise.
Yeah, this is a good example. I'll show you a chart real quick. This right here, guys, is the NVIDIA chart, okay? This date right here was October of 2018, right there at the beginning of that range. If you can't read that, what that's saying is 11,000% growth since October of 2018. Now, in that era, NVIDIA was a gaming company, okay? They were a gaming company. In this era, XRP is a SEC-sued digital asset.
Right.
Imagine what's going to happen to that market when it becomes the AI company of digital assets. That's exactly what NVIDIA has done. And 11,000% later, and now you've got something. That's why I think XRP it's a hidden gem that people just don't realize what's going on.
It's right in front of you. It's top 10 market cap the whole time,
Yeah, how does it retain top 10 market cap? Number 3, number 2 at once. So very interesting times ahead. This is going to get crazy. Jake, I know we could go on for hours. I have so many more. I'm going to bring you back because I have a whole nother sheet of questions that we would have to go another 4 hours for. I can't do that because I got to be in studio soon.
I understand, me too.
So it's been great having you on. Of course, where can people find you?